Hey, what's up guys, Aaron Bennett here. In this video, I am going to go over the video 4 and 5 for Simon Dixon's recovery plan. I'm also going to go through the 2 Twitter spaces that happened after each video. So this is about, 3 hours of content that I'm going to condense for you guys. So in video 4, Simon starts out saying that he actually applied for the UCC but was not selected. Simon again reiterates that Chapter 7 is the worst possible solution and we will get the lowest amount for our funds. He then says with Bitfinex, the worst thing that happened is people sold at 30 cents on the dollar, but that still translated to a 70% recovery. Simon says he wants the creditors to have their own recovery plan so they aren't caught in the same situation that Voyager was, where they may not have an ability to vote and say, hey, we don't want FTX's plan the way they are structuring it. Simon also mentions that Bitfinex happened in a similar time frame regarding the Bitcoin cycles as we are right now. He does say that what happened with Bitfinex was incredible. The timing was perfect. Everything was perfect. So don't expect that to happen with Celsius. So the recap of the first video, $2.7 billion will most likely be repaid to people as of the latest coin reports. That is around 47.4% of what people had in the app. He again says give people who have Cell their pro rata share of the recovery, and all of this will go to people's self-owned custody account inside this new company. The second video recap, he wants to find a home for custody, earn, and lending, which again I talked about in my previous videos, but he says there has to be some negotiations between all these different special interest ad hoc groups. We have equity that wants only the upside in the mining. We have custody that wants theirs back in total. The loans don't want any collateral taken away, and the stablecoins are trying to get ahead of everybody else to get their money out first. Simon says we have to work together or else everyone will fight, and most likely this will go to Chapter 7 and be worse for everybody. In a recap of the third video, he says we can all be beneficiaries of the assets that Celsius owns. We would have a VC venture capital fund with a mining, custody, and securities lending company involved. Again, I talked about that. We'll have GK8, Salt Lending, and possibly Bank to the Future handling all of those things. And Simon's company, BF Global, will donate 20% of their company's equity to the fund. He says we don't want to be rushed through this Chapter 11 process because that is just going to be bad for everybody. So let's talk about video 4. This is the first slide he pulls up talking about the game that we are in. Simon says that the CEO, Chris Ferraro, said exclusivity period will be extended, which I think was confirmed today or yesterday. They have not submitted a plan, and Simon does not think that a reorganization is coming. And today I tweeted that David Adler says that a standalone reorganization is not going to happen. There is going to have to be a new co like what Simon is proposing. Simon says that the examiner is looking towards things like fraud and things they did pre-petition, but they are giving us time to come out of this Chapter 11 process. And Simon says we need to get out of Chapter 11 before the examiner may start pursuing some criminal stuff. But Simon ultimately thinks we are heading toward a bidding process, and that is essentially what happened with Voyager, which I'll cover later in the video, exactly how to deal with that and how we can make sure the best offer is received and approved. So Simon says we need people in the bidding process to basically implement the creditor-led reorganization plan like he is proposing. So the next slide, Simon talks about the players that we have to deal with right now in this process. So the first one, recovery plan, Simon says that we need companies that can win the bid who will implement our creditor-led recovery process. The second one here, regulators, they want a compliant home, basically a company who will bid that has securities and money transmitter licenses. They won't let a reorganization come without it being fully regulated. So again, Simon says we must have companies in the bid process to implement our reorganization plan, which he says is the path of least resistance in this process. So right here it says creditors 50% and 2/3. What that means is that creditors have 50% of the vote by number of people who vote and 2/3 of the value. So Simon says we must not fight when it comes to the vote. He says, get our ish together and agree. So what I understand this to be is that if there is a vote, 50% of the people or the creditors that vote need to be in approval of the same plan. So here he talks about the UCC, and a takeover, he says, is risky and the examiner may not approve it. So the UCC taking over this entire process. And Simon wants to work with the UCC so they can actually represent this plan and to make sure that Celsius does not just approve a cash-only plan, which would be very, very detrimental, which I'll cover in the fifth video in a little later in this video. Here, the UST, they are giving us a chance, Simon says, again, to present a plan to get out of Chapter 11, get out of this process before he thinks, and this is just his opinion, they may go to Chapter 7 because they may find fraud or something that would just say, hey, we're going to liquidate everybody. And again, the goal is to not have that happen. So here, the bidder must have the best team, equity, technology, and compliance. And we need all of those in the bidder to win the bid. For example, FTX will most likely win if nobody else can beat them in those categories. So Simon says we don't want a company to bid on just cash alone, but we want to have our assets and also have equity in a new co, which I'll cover later in this video. So that'll actually allow us to fill the hole with the potential upside of a diversified pool of assets like mining, custody, and even Bank to the Future. And finally, fund manager down here. We need to find a fund manager that is aligned with everything we're doing, is smart enough to basically capitalize on the next bull market, to IPO with the mining company, and basically help fill the hole when the next bull market happens. So this next slide basically goes through the different categories that everybody would be in. There's going to be US accredited people, non-US accredited, non-US high net worth, so people who don't live in the US who make over a certain amount of money, and then non-US, non-high net worth, and then you have insiders right here. And he goes through all the different things that would happen in a reorg. For example, could all of these categories receive and withdraw a haircut? And he says yes. Receive beneficial interest in a fund. Could everybody invest and earn? You have the non-US accredited possibly not being able to invest and earn unless, I guess, an S1 is approved. Can you sell beneficial interest in a fund? He says yes after a 1-year lock-in. So basically everybody would be able to participate in all the things a new co would offer. Maybe not US non-accredited. They can't invest and earn, but that's okay. We'd still get our money back. We'd still get that 47% or so as of the last coin report. But this is just looking at all of the different things and could it work with all the different categories of people. And because this is going through Chapter 11, you can have US non-accredited people actually receive equity in a fund. And this is something unique about the bankruptcy process is that, usually you can't do that, or it's very, very difficult to do that. This is actually a way, which I'll get to later in the video. Somebody commented, hey, this is actually a cool thing because, hey, I'm not accredited in the United States and I could actually join a venture capital fund that has had tremendous success in the past. And that's kind of what this is talking about as well. This will allow people to invest in a new company or a new co, whereas if it wasn't for Chapter 11, they would not be allowed to. So this final slide, how do we win? We set up a win-win game. Basically, all the players are going to approve this game. We get out of Chapter 11 in the auction process. We have a creditor plan ready. Again, we have a bidder that will represent us in the bidding process. And essentially, Simon says that the other bidders want to buy our assets for the benefit of their shareholders, but not us, the creditors. So that's really Simon's point, is that we want the assets. We don't want those assets to be sold at the bottom of the market for very, very little because valuations are very low right now. So let me go through my notes for the Twitter recap for this video, video 4. He says that the 20% fund manager is to incentivize profit. Basically, the fund manager usually would get 20% of the upside. So basically, at a certain date, it would reset, and then they would get 20% on the profits. This is usually how venture capital funds work. Simon says that the 47% we'd get back is an estimate based on the last coin report, but a data analyst can model out ideal times to make those trades and deposits on the market even better. The more the market crashes, the more our stablecoins can buy and get more. So what does this mean? Well, Celsius holds a lot of stablecoins, and if those stablecoins stay in this process, meaning they don't get to take their money out first, which again, they have lawyers trying to fight for that, saying that they are secured creditors. If that doesn't happen, we will have stablecoins to buy Bitcoin and Ethereum. ideally at the bottom of the market. And if the market keeps crashing, we will buy more Bitcoin and Ethereum, and that is the Bitcoin and ETH that will go back to us as creditors. Simon says you do not want to distress sell the assets, so like GK8 mining and whoever bids like Simon's company for the securities. He says if you think there is going to be a potential upside in 2, 3, 4 years, selling assets at the cheap is just not a good idea. Simon says that Celsius never wanted to actually submit the Kelvin plan to the UCC. It was always to go to auction, which we are probably going to go to, which is what Kirkland and Ellis want. Simon says that the longer the ad hoc groups fight with each other, the higher chance of Chapter 7. He says there must be some compromises with all the different ad hoc groups, and he has reached out to each of them individually. So somebody asked, how will they value the new company? Simon says it has to do with what company puts in equity, how much that equity is worth, and essentially investment banks will value out a new company, a startup, just like they would any other company. And Simon says we are already paying investment banks anyway, so they will do this for us. So Simon says he wants to give people a choice to invest in the new company. He says it may take, 1, 2, 3 years for people to want to invest in the new company and trust anything like this ever again, but he says people should have that choice. Some people will sell the Newco shares immediately, and others will want to buy these shares. And on Bank to the Future, there is a secondary market where that's already possible. So Simon says that FTX would want to win because they want to buy our assets, not just the coins, but like GK8 and like the mining company, and also get the customers, 300,000 customers. But Simon thinks FTX buying our assets is a PR disaster for them, especially if the creditors feel cheated, like it was not the best offer. All right, guys, let's talk about video number 5, which came out yesterday. So Simon says that only bidders that are doing things compliantly, the way Simon is proposing, can make a bid, and this is what the U.S. trustee actually just came out with in a document on Stretto, saying that no company can bid unless they are incredibly compliant. Simon says he has worked through the game theory in his brain, and he says the only way to come out of this is through a bid. He said this is what happened. Kirkland and Ellis creates a reorganization plan, Kelvin. He gets people thinking that that's going to happen, and really it just goes to a bidding process, kind of like what happened with Voyager. So here is the slide, 2 bid types. The first one, there is a cash bid where we the creditors do not get to vote if we want it to go through or not. The second is a cash and reorganization bid where we the creditors do get to vote. And the cash and reorg bid is what FTX did with Voyager, which I'll cover a little bit later in the video. But Simon says if a cash bid is accepted, that is not good. So what do we need to do? We need to have a bidder that represents the creditors like Simon's plan here, which would be a cash and reorganization plan. And this bidder can put forth a plan with the proper team and licenses that is better than any of the other cash bids. And he thinks that the investment banks will determine if a cash and reorg plan is going to be better than just a cash bid, or definitely better than a Chapter 7 liquidation. So here is the cash and reorganization plan. And this is what needs to be in this plan. So the first thing Simon says, we need to eliminate all the risks of regulatory issues with this plan. Here, equity value. So this would be valuing some of the equity like the mining and GK8, saying, hey, this is worth a lot of money. So there has to be some fund value. This would be like the 20% that BF Global is going to put up. Cash value, obviously there needs to be some cash in this plan. Here it says perks value. So FTX is giving $50 per account for Voyager customers to come over to FTX. It would be something like this. And tax value, basically it would have to be a better tax situation for a cash and reorg plan than just a cash plan. And Simon is going to talk about taxes next week in a future video. And Simon says that investment bankers will determine what is best for the creditors, what plan makes the most sense. So continuing with this cash versus reorg, we need the best bidder who will offer equity and assets to the creditors fund. We need enough cash to get in, and I believe Simon says that this cash will come from the company who is offering up some of their equity. We need really good sign-up perks with this new co. And we also, again, need the best tax-efficient structure for all the creditors to not get screwed when it comes to taxes. So here are some examples of the perks that Simon said. Proven paid educational products like what Bank to the Future has offered and people have paid for in the past. We can offer discounts on products that people are already paying for. There can be sign-up bonuses similar to what FTX is doing, and we can also give people more equity if they decide to stay with the newco and not take their money out. So before heading to the Twitter Spaces, Simon says he needs to pitch his shareholders to invest in this newco, this 20% of their equity. He thinks they'll go for it. Bank to the Future has a tremendous success record in the past, and this would help them as equity holders as well. So let's talk about the Twitter Spaces that happened yesterday after this video 5. Celsius Loans asked Simon why Celsius extending their exclusivity, which they just announced that they are, isn't a bad thing for us in the bidding process. For one, Simon says that if they removed that exclusivity period, they would get a ton of crappy plans, the UCC would get inundated, and ultimately this does not affect our ability to put together a creditor-led reorganization plan. Simon said to join the correct Telegram group that represents you. I link all of them in the video description. If I'm missing any of them or the links don't work, just let me know or send me a message on Twitter. Because Simon is talking to the leaders of these groups. A lot of them are represented with their own law firms and lawyers, and they have their own ad hoc groups. So make sure you are involved in that community if you want to kind of stay afloat of what's happening. So somebody asked about how can we move forward if we don't even know who owns the property, who owns the crypto. Simon ultimately says that we can get our funds out with this plan before they decide who owns all the crypto or not. That could take months and months. The examiner report could take a long time to come out, but it is kind of a complicated issue. And if this is indeed our property, this would change some things. Ultimately, what I got is that Simon said all of these things can be settled in court. They could take a while, or we could just decide to work together, get this plan approved, and get some liquidity out, and also get some equity in this newco. Simon alluded that Celsius has full ownership of the marketing to customers. So essentially, Simon cannot send his videos to all 600,000 plus people or creditors. So if you have any marketing expertise or want to help get the word out to more people, please do so. So about the voting process, Simon said that 50% of voters need to approve the plan. So he says even if like 50,000 people vote, only 25,000 of them would need to be in approval of a plan for it to go forward. So I actually didn't know that, and I may have misheard him there. I actually thought that everybody will get a chance to vote, and then each group will have to have a certain percentage in order for a plan to go through. But apparently not all 600,000 creditors will need to vote. It's just a percentage of the ones that do vote. So Simon again reminds people that a fund manager would have tremendous incentive to grow these assets like the GK8, mining, possibly the coins that will be coming back to us later from different companies owing us money, and eventually take that mining company public. So I talked about this earlier in the video, but somebody asked Simon, or basically told Simon, hey, I have mostly stable coins or all stable coins. I'm in the US, I am not accredited. And he's like, this is very exciting for me to basically join a new company, join a venture capital company with Simon, who has a really, really good track record. And actually, he's excited about basically getting some crypto back with the 50-50 Bitcoin ETH, and also getting equity in a company where, as a non-accredited investor, you actually can't really do that. So somebody asked about how can we incentivize people to not pull out their funds, to basically grow the value of this new company. And Simon says there may be some ways to maybe leave your coins in longer and then you'll get more equity, but that is a good question. So Simon says that if Celsius chooses a cash-only plan, that is very bad. To avoid that, Simon said that the value of this reorganization plan, which is presented by the UCC or with the UCC's help, needs to be much more profitable for all the creditors. He also says that we need to be somehow prepared if Celsius does just approve a cash-only plan. But Simon, again, is working with the ad hoc groups and with the UCC to hopefully make that not happen. Somebody asked, how is a new company funded? Like, where is this cash coming from? And Simon says that a company that is bidding, and there may be multiple companies that bid, will need to be sufficiently capitalized, and that is where the cash will be coming from. And finally, Simon reminds people that tax consequences of owning your funds versus not owning your funds can make a huge difference, and next week he will talk about that in a future video. All right, guys, that is it for the recap of video 4 and 5 of Simon's videos and Twitter Spaces. Hope this was helpful for you guys. I'm happy to cover the other plans going around. I've seen that other people in the community are offering plans and solutions, so I'm not strictly only going to talk about Simon's plan here, but he is making it very, very educational, and I think this is helping a lot of people understand the entire process and what we need to do. So I hope this was helpful. I will leave the links to Simon's YouTube station below and also his Twitter. I suggest you follow both if you want to stay afloat on what's happening. And guys, till next time, talk with you soon, and bye for now.